this technology can be controlled. That's the approach we will follow.
Digital India, also digital, the
Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and then all the stocks that are buzzing the most in trade. We'll also get you expert views to find out what exactly should be your strategy in the current market setup as well. But first up, a quick check on how the markets are doing at this point in time. Well, let's look at the Nifty and the Sensex, turning out to be a great day for the markets because we've seen 18,700 being crossed for the very first time in 2023. For the Nifty today. We've also seen the Sensex jumping about 345 points in today's trading action. It's topped the 63,000 mark as well. A very, very strong run up in the markets in today's trading action. 125 points of an uptick for the Nifty, 340 points of an uptick for the Sensex as well at 63,135 currently. We're also seeing a whole host of sectors. The broader markets doing very well. 1% uptick for the mid caps, the small caps up by 1.4%, outperforming the benchmark indices for sure. It's the consumer stocks that are leading the rally right ahead of the RBI's Monetary Policy Committee meeting tomorrow and the policy review tomorrow. The markets are definitely doing very, very well. We're all seeing all the 13 major sectoral indices logging in gains with heavyweight financials and IT stocks rising about 0.3 and 0.4% respectively. Remember, the IT stocks did register huge losses yesterday. In fact, for the Nifty IT index, it was the worst performing day in the last 2 months or so. But there has been a recovery in today's trading action as well. But FMCG stocks, that's where the focus is lying in today. You can see the IT pack right at the top point of the day as well. But, look at the FMCG pack. That's the one that's been rallying and, leading the movement in today's trading action. 0.7% up for this one as well. Among the top sectoral gainers, you're also seeing a whole host of names from this basket today. Britannia, Tata Consumer Products, Nestle. These are among the top Nifty 50 gainers as well. In fact, brokerage houses do believe that margin benefits at consumer staples firms will sustain amid the falling input prices going forward from here as well. So that's exactly what the setup looks like at this point. But let's get experts to talk about more. Where can you find opportunities to invest in this current market setup? Rikesh Parekh joins in. He's the principal officer at Rockstead Capital, joining in right now. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, I wanted to understand from you, we've been seeing this remarkable move on the markets. How long do you think the rally can sustain? Are we going to see that record level on the Nifty pretty soon then?
Yeah, thanks for the inviting. Yeah, definitely we are seeing a move, a consistent move from the last 2 months, from the March lows what we made, and the market till now is up around almost like 7.5–8% from the March lows. So the market has been moved for the last 2 months, and we are reaching almost near to our all-time high, which is around 18,000, which was around 18,800 level, and would be third time lucky for this probably valid goes past this time as around. But if we look at in the past, when the market has reached this 18,000 odd level, and today there has been a lot of things have changed in between. The market for the first time in October 21 had a reach it made a high of around 18,600 odd level. Then post that in December 22, it made a high of around 18,700 odd levels, and now today we are back at 18,700 level. But what has changed in between is that the earnings between the two periods. So earnings of FY21, which was around 541, which is reached to FY23 is around 807. So around 22% earning compounded growth, while the market has not moved anywhere. So if you look at this background, the earnings have improved substantially between the last 2 times and this and today. Along with it, the interest rate trajectory, the last 2 times when the market hits a high, interest were expected to decline interest were expected to rise, or were in the rising mode as such. But right now, as we talk, there are a lot of expectation building up. RBI has already gone for a pause, and there is an expectation that by the end of the year, we could be seeing some amount of rate cut happening. And third, the FIs flows, they are back with the bank. I think 5 billion of inflow, which was the highest in September 22, is something which talks about which is driving one of the market to this new high level. So all said and done, I think so the interest rate earning are favorable in favor of the market. From here on, how it goes forward, definitely the very near term will be the monsoon, which will be the deciding factor for the markets as such, which will drive the market from here onwards, and along with it, the earning. So these two things will be from the near term, short term point of view, the deciding factor, and also the FI flows going forward. But looking at the momentum, it seems the momentum is still on, and the conditions are favorable for the market to make a new high.
Right. Okay, so the conditions are favorable, and we're just one day away from the RBI's Monetary Policy Committee review meeting. What is your own expectation from this time around? The large part of our analyst community, economists, do believe that we may be seeing an extended pause even this time around. In case that were to happen and a status quo, review does happen this time, what will it augur for the Indian market scenario then?
Yeah, well, as you rightly said, obviously the expectation remains that it will be a pause for the time being. And obviously, after a series of rate hike, we have seen a 250 basis point of rate hike over the last 2-3 years as such. It is not very easy for the RBI to change the stance very immediately. While in the last April meeting, they had taken a pause ahead of the other global federal, which are still going for a gradual rate hike, although the pace of rate hike in the Western countries have reduced. There is an expectation of quarter basis or point of a rate hike in the US and might be going for a pause going forward. So we have taken a pause in advance, given the condition that the inflation data which came for the month of April was 4.7. RBI in the last commentary has talked about that the May month data is going to be conducive, is going to be better than the April, which is likely to be released on June 12. So I will say environment is conducive.
Okay.
Global data points as such, where the world interest rates are moving. So till the time they doesn't go for a pause something, we don't expect a rate cut very immediately. But yeah, towards the end of the month, might be in December or a February meeting, we are expecting most likely at Oxford a rate cut is a possibility of where the RBI will start cutting the rate as such.
Okay. Which are the particular sectors and themes that you believe will lead the rally from here on for the markets? We are in the second half of trading action. Where do you see momentum building up? Because in the last 1 or 2 months odd, we've been seeing a sectoral rotation taking place. Talk about today as well. That's the FMCG stocks that are taking the lead. How are we going to see which sectors really take the lead going forward?
Well, in terms of sectors, what we believe is that financial, it definitely, which has been on the roll for the last 2 years, and in terms of the earnings, the qualitative or earnings have improved substantially. So financial obviously will be the center of the momentum, and earning growth is supporting it. And this will be the sector which will continue to move ahead from here onwards. Along with it, auto, which has been where I will say the earnings have been improving for the last 1 year. And probably with metal prices coming down or the input cost being benign, the benefit getting in, that sector will continue to do well from here onwards for the immediate short next 12 months of perspective.
Okay. Any particular top stocks that you're betting big on right now, where you do believe there could be substantial gains, going forward from here?
Well, particular talk will be very difficult as such, but how we look at it is that within the financial sector, let's talk about BFSI. Banks is likely to do well, but till now we have seen the banks leading the rally. But from here onwards, on expectation that the interest rates are going to come down, probably it is the time for NBFC, because they have seen the higher cost rate of interest for them, cost of borrowing. So which will become a favorable factor for them from their perspective. So it could be like NBFC leading within the BFSI segment within a space. And from the auto segment perspective, two-wheeler is a segment which seems the momentum has been coming in the favor. Export markets, which has been on a drag, has been opening up and could be leading the space in the two-wheeler segment.
Got that. How are you looking at the mid and the small cap basket at this point in time, Mr. Parekh? Do you think it is time now to start nibbling into this space as well, and this space may outperform going forward too?
Well, definitely means after the large cap, we have seen that it's a time for mid cap, mid and small cap. So it seems that means if you see the last 1 week or so, the mid and small cap has been outperforming the benchmark indices, and the time has come for the mid and small cap. Having said that, yeah, definitely mid and small cap is the space at which we believe there is a lot of money to be made as such, or from the long-term investment perspective. But definitely after the large cap, I think so the time has come for the mid and small cap to continue the momentum.
All right. Thank you so much, Mr. Parekh, for being with us on the show and discussing with us all the insights about what to expect in the markets going forward from here. Let's look at how the markets are inching higher. They're actually not stopping right here. 355 points of an uptick right now on the Sensex. The Nifty also at the highest point of the day at 0.7% uptick at 18,726 currently. Definitely inching towards its all-time high levels as well. It's not very far away. It's just about 150 points away from the all-time high levels. Could be this week as well if the momentum continues in this way. 63,154 currently for the Sensex as well. 0.5% of gains coming in, but very, very strong momentum coming in from both the broader markets, mid and the small caps. The FMCG stocks, banks are doing well. Realty, autos, all of them are definitely supporting the benchmark index moves as we move along. We'll continue to track how the markets move forward from here. We are just about 15-16 minutes away from the day's close, but do stay tuned on to Business Today TV to catch all the updates from the world of stock markets and business. Thank you so much.
Though not the Maharaja, Indigo is still the undisputed king of Indian skies. And the airline with the ubiquitous blue livery is ensuring its holds onto its crown.